General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, all right, we're good to go. Friday we was waiting on TGIF. So was this. Thursday was the 11th. Rest in peace to all the people from 9/11. It was terrible. Okay. I think, what did I do here? Okay, this never was a big deal. So when I redid this for Friday, I just changed this to TGIF. This goes here. Okay, so I'll take it off of this. And then here. PM. Hold on, wait. Let's go here. It's just got my lines on it. Friday, what was in the news Friday? Consumer sentiment. Consumer sentiment is usually always bad. They pushed us up this time. Note to self, that's actually important because I usually can sell consumer sentiment. This would have got me if I was trying to do that. I was looking for, because we took the high. Since I traded on futures, but I tried it over here. I seen we took the high on Friday. We didn't. We just kept pushing. Then I was like, okay, wait for PM. That's the good thing about having these times. If it don't happen here, we come back here. We got this PM, but retracement to this gap end of day Friday, it's not something I want to push. And I seen this thing, the MMXM trader post about just waiting for your setup. And I like the top prop firm traders only take like 5 to 8 trades a month. One-sided delivery on Friday. We broke the high and squeezed Hold on. Our early sellers. I mean, that's what y'all get, though. It wasn't no confirmation to sell. Y'all know y'all was wrong. Buying made sense. Buying made sense Thursday after CPI. A lot of people did this buy too. I seen some of my trader friends. It's like, I'm buying this. I was like, that's so logical. But I wanted to sell because I wanted the bigger trade. I didn't want the little trade. Time and place. Yep, that's why I wanted that to happen. It happened too, but it didn't happen fast. Let me turn off my S&T window background thingy. S&T 10 with 10. Bam. I don't want to see that. I got to do that for my other ones too. Friday, just one side of the week. I was looking for TGIF. I might even have the fib still up. Where's the fib? What was it again? Nah, it's this. So I was like, oh, cool, I'll take it. Because 20-30% is right here. I'm like, I'll take that trade because that's a 2% trade. And it's logical if it's time and price, and it's a model I know if it do set up like this one. This one did it. It retraced to end the week. It came back past the 20-30%. Probably couldn't have traded this though because I think this was news. You probably could have chased it. Trade chasers make money too though. I seen it. And boom. Then here, just one side of the week. One side of the week, Monday low of the week. Monday low of the week. And no, Monday didn't take liquidity. Usually when Monday is low of the week, it takes liquidity. Okay, hold on. Oh, LIQ. I like that. Let's go. Nas100. It's the daytime, the daily. Let's go here. I like Nas chart because you ain't gotta. Well, I like the continuous chart too, but continuous chart, the lines move. I'm sick and tired of that. Friday closed above buy side liquidity. Look at how this weekly open never got tagged. Closed above the buy side liquidity. Look at how the weekly open never got tagged. Very interesting. Let's go to silver for Friday. /USD. Okay, take it off of this. Silver pumped Asia. See how it's not as terrible as this is? Let me see if it was just bar replay. Nah, because look, Tuesday get janky too. Yeah, they need to update their Forex feed. It's disrespectful to the $1 trillion market that Forex is. Time frame and 15 chart image. Chart link. Notes. Asia started a big rally, and London and New York played around. Yeah, New York didn't even take no type of liquidity. It wasn't interesting to say anything. Even look at it on the hour. Just take a look at the week. I might make my new week opening gap brighter or something. I need something. Maybe the text. Stage one. I like using a new week opening gap instead of the weekly open. I don't want to have two lines on my chart. They kind of mean the same thing. Okay. Mm, mm, okay. Just looking at Friday. It's engineer liquidity for next week. So nice setup. As far as trade ideas, it was none. Let's see if we did TGIF. We probably did it over here and I wasn't looking. Where is this? We'll call this Monday high just to be technical. So news come, let's sell, TGIF. It would have gave it to you. It would have gave you a TGIF. Would have gave me a TGIF, but it's tacky. Let's go here. XAG/USD daily. Let's go here. We just closed above the highs. Does this look interesting? It does. This is like a breakaway gap though. This is still going to be a draw in the future because it has to come there. I just seen it do it too many times. Leaving behind some nice sell side targets for when we start the buy program, right? Or when we start a sale program. Right now, the buy program is in full swing. Targets, TAR, bam, 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 bam. Okay, knock that out. Then here's Euro/USD chart. M15. Friday we chopped. Well, we did. We did what I thought. retrace and then start going for higher, but we didn't go any. I want to see at least 3 days. Where's Monday? Okay, the Monday line stopped. The ICT kills on with pivots, probably one of the best indicators ever. This is good as ICT everything. Okay. Friday gave retracement, but the move after was not explosive. So I don't know. I don't feel like I don't feel like this week was that powerful for EU. And we could just be setting up for a rollover week and quad witching, which is next week. We can play that week right. It's enough for any kind of week when it comes to trading. Is you play it right and catch a big week. Those are life changing events. Just when you show up trading every day, like it could be that day. You're not even thinking practical. Here, bing, bing. I will watch this. Like leaving here, I could be okay with, especially breaking above here. But even just going into the next week, that alert can go. Okay. Note the chop. Hold on. Note the chop. I wouldn't push too hard. It look like we can run Friday low and use that to go higher. Let's go to the daily. Yeah, Doji Day. Day close to Doji. Doji. So we wait. We're just waiting to bushes. We're gonna snipe something. All right. So boom, that's finished that segment. Let me do the review segment, and I'll do that different as well.